Guys, welcome back to my YouTube channel. I've been receiving a lot of message from people that they want me to explain about the entry confirmation and the stuff that I'm looking before I take an entry. I've already done one video where I explain what I look at, but this one is just gonna be almost the full breakdown of everything that I'm doing, that I look at. So this is the one that I'm gonna show you guys from where I started with this one and right now where it is, how we could take a buy entry and from the sell entry. So the first things that I want to show you, let me just mark the level first so that I can go inside my chart lab, then I can show you. Do you see this zone here where we have this supply level, how market was playing? So all this zone here, I've been watching all this zone, the way it was happening. I have everything that is on my chart lab, if you can check from here. And the first one was somewhere here on top. Let me go to the top side. Where is it? Sure, it has to be somewhere here on top. Yeah, the first one was here where I was expecting market to come back and buy from this zone. Then we get a buy from there. Then market went straight to the upside, and this was the small time frame, was M5, what I was able to do and look at. So before I take the entry, then I end up catching this sell movement. I've already done a full breakdown about this sell. You can watch the video, or I'll just make sure to put the link below there so that you can check it also. This is gold. Then what happened next was this one. I was expecting market to come here to buy and run all this liquidity so that we can sell. Then this is what ended up happening. We get to the level, we had the reaction for us to go to the downside. So without taking time, I want to show you guys another picture before I go to my trading view. So just wait a bit. Do you see this one? This was USA 30 again. I was expecting to sell here and sell from there. Then these things end up happening like here. You can see we get there, we had the reaction for the first time. And if you can check, even here I said we have to come and buy from here. So market, this what market did, react, come back, buy from here, react from there again, then sold. So all this was what was happening. I was looking at it. Then there is one more picture that I want to show you guys. That was the big projection of this USA 30, but I end up taking the picture a bit late. Was this one? So because I saw this liquidity, the way market manipulate this area, so I was expecting market to come and start buying from here. Let me go now to my chart so that I can show you guys what I was looking at. So after market manipulates all these on, the only thing that I was waiting for was for market to come and start buying from here. This is what I was expecting. Then after that, I realized this level was just a liquidity zone. Why? Because we have this low that happened here, you see. So this zone was just a liquidity zone. Then there was another level that was being ignored on the left side. So this was was this area I was looking at for me to be able to do it, to come and catch the entry. That is the one I was looking at. I say, okay, so this area is where we need to take the entry. So when you have the zone like this, let's say your zone, they manipulate my zone, because this was my main focus. I was waiting for market to come and trade inside here so that I can be able to catch the movement. Then I end up failing not to take the entry from here. Then from there, I didn't look at the market again until it come back to this zone. So how do you take your entry? I'm sure, sorry, I made a mistake. Was this one? Yeah, this is the one I was looking at. Yes, this is the one. It was from this low. Then we manipulate. If you check here, there was a nice manipulation because they took out, market create this mitigation, run to the upside. Then when they come back, they could not buy from this level. As you know, guys, I normally use supply and demand. That is my main focus. So here could be my perfect entry, because this one is the engulfing type 2 that we look in the market. Then we end up seeing market run this liquidity, take out this liquidity. So this level here was a strong level for me, because there was a clean break. Check, this was a clean break, then market's supposed to come and react to it. And if you check again, we have this imbalance here, what I call it the hidden base. Most of the people that are trading other type of smart money concept, they'll tell you markets come and feel the imbalance that was resting there. Then how do you take your entry now? Here come the story. So if you know how to take your entry here, you are a risk taker, you can risk like this. You just take your entry when market get there straight, and your stop loss maybe somewhere here, because when you have the hidden base, let me just draw for you guys. When you have the hidden base like this, so you need to understand where you need to put your stop loss. This is the question someone asked me, that how do you take an entry when you see this hidden base and your stop loss must be where? You see, so this is what I want to show you guys, how I take my entry and how I refine my entry. So because I know this is my hidden base level, I'm gonna take the low point to the higher point. That level become my zone. So my stop loss is gonna be just below here. That is where I'm gonna put my stop loss. So this is how I do take my trades. Then when you have your stop loss, let's say you have your stop loss here, you need to know that, okay, this is USA 30. Sometimes it's gonna take a huge stop loss. So this is just H4. I'm just giving you guys an example. You're not gonna trade the USA 30 with 100 pips. Yeah, so at least you can take 30 pips is okay on USA 30, 15, 10. It's okay. Don't try 2 pips here, because you're gonna get banned. Now we are selling, sorry, we are buying from here going to the upside. The only thing that you need to understand is there any price, any level that is going to hold our price? If I don't see something clear, let's say I have this one on H4, then I'm gonna mark this level on H4 and try to see, okay, this is the level the market is going to come and start reacting to it. Another thing that I want to check, maybe I can decide, let me go to H1 and try to understand, is there anything that market manipulated before coming to the downside? So this is how you need to look at a market. By the way, guys, I'm sorry, I think network is at a bit problem. We can wait a bit. What is going on? Let me see something. Okay, the other one refused to open, but this one open. So let me show you. Then when I see something like this, the only thing that now pick in my eyes is this one. Do you guys see what is happening here? Do you see all this candlestick? So there was a sort of manipulation that was happening here. Why it happened there? It happened there because of all this level. So when you have a zone like that, what do you wait for? You are waiting for market to do something like this. Let's say market compress to a decision point like this, then market start buying. So you're expecting market to come back and touch this level, then buy again going to the upside. But if you check on this case, what happened here was market gets on this zone like the way it was coming. Sorry, let me just put the other one. Where is it? Market gets on this level, then give the same pattern again from this level. So what we need to wait for is to see what is going to happen here. How do you take your entry? Then market drop. So here they build what we call calls. They manipulate to the downside. So when market is coming back, what we need to see is just to see, is there any level of liquidity? Sometimes market is going to create a type of liquidity like this, then come to the downside. So when they run this liquidity, you know that they'll seek more liquidity inside this zone. So to come there, then drop, then continue again. So this is the things that you need to pay more attention to. Most of the people, they did explain it, so you just need to understand what is happening. Then when I see something like this, my aim now is gonna be try and find something. If I can get something like this inside, let's say market do something like this, manipulate this low, then return to here, just I can take my entry. So this is what I want to see. Or sometimes you're gonna see we have this low, but market create that low, do something like this, go to the upside, come down, go to the upside, maybe go even huge day up, run all the liquidity. At the end of the day, they return back to this zone, then drop again. So this is also another type that you can see they're happening in the market, so you need just to pay attention to. So if I don't see that level, let's say I have this on, then the only thing I'm gonna do, I wanna go to M15, maybe let's say I go to M15 for me to be able to do it, to see what was happening inside that zone. Or I can go to M5 and try to understand where the manipulation was happening. When I come to this zone, remember this is H4. This was H4, where I selected on H4. Now the exactly level their market wanna do, check what happened here. Is this the same thing I'm just explaining? If you check like this, what do you see on this low? Do you see on this low? This was the one that we call a snipe entry, zero float. So market did the same thing that I was explaining. So if I take this one, let me do something like this. If I take it and put it aside, you're gonna see they manipulate this low, then they come back for it to go to the downside again. So this is what market did from this area. You just need to pay attention to all these details for you to be able to catch the movement. Let me just do something like this. Let me delete all this stuff first. Okay, you just need to understand, okay, this is what is happening in the market for me to be able to do it, to catch your entry. So this level could be your perfect entry for your snap entry. Then you want to know where you have to go and take your trade again. But if you check properly, we have the liquidity from here. You want to know where you have to go so that you can be able to catch again the buy position. This is one thing that you need to pay attention. This is where my cycle come in, that I look. So when it comes to cycle, what I look at, first things that I want to try to understand, I'm just going to tell you guys, is a normal cycle is the same like the people that they're using, the BTMA, like beat the market maker. So the first one is the one that we have. Let's say we have M, we have AA, then we have W, then we have W, we have VV, then we have M. So I'm just gonna draw these things for you guys. I hope I'm not making mistake. So let's say market is going to the upside. The only thing that you wanna see is for market to give you a peak formation, something like this. Then market, this peak formation is the one that we call M. So market has to drop for the first time, then push again back. Sometimes you're gonna see market just get here and do this correction, let's say something like this, then drop again. Already you need to count how many drop or you already got, so that you can be able to see if you're gonna get the reversal. Then what you need to wait for is for you to wait for, let's say people what they call the liquidity, stop and or shift in market structure. So let's say we have, in this case we have a stop and. So what we're gonna see, market that we do something like this, then market is gonna reverse. But if you count properly, you're gonna see this one was a correction that most of the people they call complex pullback, whatever they call it. This one is a correction. Then this one here was the M, the one we call a M, or we peak formation. If you can check, we create this liquidity, we come and run it, then market break the low, market break this low and pull back. This pullback, most of the time they're happening, sometimes they can go to 0.61. If you check here, we're gonna say this one, maybe it goes up until 0.61, for you to be able to catch the entry, or 70.0. If it's gonna go more to the upside, that is the one we have 0.886, for you to be able to cut the entry from there. But my main focus is not about that. My main focus is about this push, this drop here, 1, 2, 3. That is the one you need to keep in mind. You need to understand, even if you see market is doing something like this, just understand that there is a build of course. Here maybe you can have what you call your Wyckoff, the distribution schematic. Here you can have your redistribution. Then market give you a reversal pattern after taking out, let's say maybe a liquidity was somewhere here. After they take out all that liquidity, then they reverse from this point for you to be able to buy. So this is what we need to look at. This is what we call the first one. The top one is the one we call the M, and this one is the one we call the A point, and you have again another A point. Then here come your W. That W is the one we call a peak formation. It's not like you're just gonna have a W like this. Let's say you have a W like this and you think, okay, I need to see a W only like this. No, this is also one of the variation of the reversal pattern. Or what you're gonna see, you have something like this, then market reverse, because this is the one we call the W extend or stop ant. Then the last one is the one that we have something like this, then market reverse. So this is the one we call a shift in a market structure. It's just a rebrand. People, they keep on like changing names, whatever, and some they call this one double bottom, and this one they call it a stop ant, but all the things, they still the same thing and play the same logic. Then when it comes to the buy side, if you wanna buy, let's say sell side, you wanna see market again, it give you the same W like the one I draw. Then market is gonna come downside. Let's say market come in, goes up. This one is gonna come up until this area, then go to the upside. If you count already, we have 1, we have 2, and this is the last one. What do you wait for? It's just a reversal, and then you're gonna have market, maybe let's say it's gonna give you something like this until 60% of all the movement, then push to the upside. So this is just a correction to come until this area. Let's say you have a decision point that was here, then market just come for it to buy. I hope you understand what I'm trying to say. This is a reversal pattern, then this is this one. So we have the W, then market push for the first time, retrace just to come and buy. Then this one is the one where we normally catch the continuation. So if you want to get a swing, for most of the people that they like to be a swing trader, make sure you catch the movement from this area. When you catch a movement from this area, you know already you're gonna hold the trade up to the top. If you're a risk taker, because this is a low risk buy, if you are a guy who knows how to risk and you don't care about losing, you can get an entry from this one. But how do you get an entry from this one? This is also come the issue of knowing the candlestick, because let's say on this one, if market wanna reverse, the only thing that you need to pay attention to is, okay, let's say market create the first candlestick, then when market create a new one like this, you know already, okay, this become like an engulfing candlestick. Then what you're gonna wait for is you're gonna wait for the next candlestick, let's say maybe to open and come trade inside this zone. So the new candlestick that is gonna do something like this. Let me just draw it for you. Or you can go to low time frame, maybe 30-second or M1, just to refine your entry, something like this. The candlestick just trade below like this for you to be able to catch the movement and goes to the upside. So this is where you need to look. Then if you count properly, you're gonna see this is what you call number 2. This is number 1. Then here you have your 3. Then here you have your 4. Then you have 5 with this formation for market to reverse. So this is how I look at the market for me to be able to catch the movement. And let me give you guys just a typical example. This one happened on USA 30, how we could just catch this movement. I think I need to delete these things again. I hope you guys are gonna make note about this, because this is just a full understanding of what I look at in the market, and how I take my entry. So the things that I want to explain is most about this movement, the one that happened here. This is what I want to explain, because we know already what was happening here, how someone could take an entry. And if you want me to show you guys about how we could take an entry, because when you don't have a clear structure break, but you know this is the level where market has to buy, and if you can check this candlestick, do you see this one? The other one come engulf this one, so you could be able to catch your movement here. But if you go, let's say, to H1, if you go to H1, for those one don't care, you're gonna see that this one here is the inside bar, candlestick, this one. Then when this other one open, this is gonna be the level that you're gonna refine your entry for you to go to the upside. So let me go back to M30. But what you see here on M30, you know market is already mitigate all this zone. Let's say we run this liquidity from here, then we leave this zone. How do you get your entry? And the only thing that you can see from here is we have this peak formation. Before I explain anything, and check going to the upside, what you see on this movement here going to the upside. This is the things that you need to pay more attention to. As me, I can see is that I can tell you I have a peak formation here that come inside this zone. If you go to low time frame, we are going to refine our entry from here to be able to catch all this movement. But check what happened here. We have this peak formation like the one I explained about the W stuff. If you can check, this is the W stuff for market to reverse. Do you see? Then when you have that W formation, what are you gonna wait for? Some people, they wait for market to create this low risk buy. From here you have your low risk buy that is happening here, but you need to count what is the push that market is giving you. And from the push that I'm gonna show you is that we have this push that is the first movement, then this is the second movement from going to the upside. Here we create number 3. Number 3 give us number 4. Number 4 is trading where? I explained to you guys where number 4 is gonna be. Number 4 always be a continuation. Number 4 just get here as a continuation. Then check number 5. Number 5 push with a big movement because it's the last push that has to happen in the market. Then we push so huge to the upside, but what you see, we have again M formation for them to do it, to drop. So then when that M formation happen, market has to drop. But when market is dropping, the only thing that you need to pay attention to is to count all this level. I have 1 there, I have level number 2, then I have the level number 3. When you have all this level number 3, then you have this correction. If you check inside here, this is the one we call a correction. You need 2 correction and 3 impulsive movement. So this is the 2 correction movement. Let me go to M15. If you can check here, let me just delete this other stuff. If you can check here, what you see, we have drop number 1, drop number 2, and drop number 3. Already my cycle is already complete. But what you're gonna see, most of the people, because they don't understand these things the way they're happening, they will expect market to come and run all this low. No, there is a liquidity there. I'm not gonna buy from there because there is a liquidity. No, it's not always about that liquidity that you think. It's about understanding your price cycle. At the same time, I told you guys, these things, when market is correcting like this, sometimes it's just gonna go deep down just to go and mitigate a level that was being ignored. Then check what happened. Market just get on this area where we have our demand level, because here we have a drop base, then market rally. So this is a strong level of demand. But what you see, for people that they lack liquidity, this is a liquidity level, then market drop. I'm not adding time when you take all this entry, But if you want, you can also add them, because if you check, this is the one we call the London kill zone close. Then you can get your entry, go to the upside. But how do you get your entry? This is also another thing that I was trying to explain about the entry. You just look for a formation, candlestick there for you to be able to take the entry. Now, if you go back to M30, check now, what is your target when you are buying, let's say from here? You are not gonna start selling again from here because you see this block, oh, let me sell. If you know how to do the scalping stuff, you can do that. But me, as long as I've already get my entry from this zone, I'm not gonna sell here, I'm not gonna sell here. I know my main target is for them to come and run this liquidity. When we run this liquidity, this is when I wait for shifting momentum for me to understand that, okay, now I'm gonna be able to catch the reversal again. But without that, I'm not gonna catch these things. It's the same topic like AKFX explain also. If you guys want, you can go and watch his video about the strong high and the strong low. So if you check from here, I'm gonna try to explain that things. You see, this one become a strong low. Why? Because it ran all this top. We run all this top. It's the same like structure, it's just a new name, but it's the same thing like with the one we call a structure. Then here we create this eye. This eye become a weak eye because it failed to take out this low. At the same time, market already create liquidity. Then we create liquidity, we fail to take out the low. So when you are buying here, when let's say you are buying here, this is your first entry, you catch this movement here. Where is your first TP? My first TP is gonna be here. That is my first TP, because this eye was the one that produced this low. Then when I'm buying, I need to take out first this one, then I'll see all this liquidity that was being created from this zone. Do you see? So this is how I need to do my targets. I have to target like that. It's so simple, guys. You just need to understand where are you in the cycle, where is liquidity level. And if you check this zone here, this zone also is a very nice one that could hold price. But the only thing I'm not gonna sell from here is because of day one. So when I look at day one, I see like this thing, the momentum is not to the downside, market is pushing more to the upside. So maybe I'll just try to see how market is going to react from this zone. Yes, if I want to scalp, I can scalp there because we take out all this low, you know, all these things. If I go to H4, sorry, you're gonna see there is a break of structure. So, and this is almost where these things has to stop for today. Then tomorrow, maybe we're gonna have a retracement up until somewhere here. Then we fly again to the upside. So you need to understand, you don't have just to trade because you need to trade. I know most of the people, they trade M1, even myself. I want to start doing that. I want to do the scalping stuff because I'm going to be busy with other issues. I cannot always wait for those higher probability trade. So I need to see how market is reacting. Let's say if I go to M5, so that I can start, you know, catching all this small movement. Also, sometimes, you know, when you see market get here, you scalp maybe this sell. Again here, you know, you're gonna have a reaction. So you take this trade. This is how most of the people that they're doing the M1 stuff. But they have the higher time frame direction. They understand where market is gonna go. But because of the small time frame, here they want to catch this movement. And they know I'm catching this movement, but they need to know where they have to exit. This is here come those manipulation I was explaining to you guys. I'm sure I'm just gonna draw them for you again so that you understand. You see, we manipulate this low by this movement, then market come to trade inside it. It's not about this other block, the one you see here, but it's about where there is the price imbalance. So if you can check here, even if you check somewhere here, you're gonna see there was a hidden base that was being ignored from this level. You see, so this could be your entry for you to go long. Again, because we break this low, we have liquidity, we break, then what is the level, what is the last price imbalance, then you're gonna see is this level. You could react again from here just to catch a movement, to come again back to the downside and take another entry from here just for you to fly. So this is how you see most of the people they play. And if you go on M1, then you're gonna see these things clear. Let me go to M1 from that zone. Then you're gonna see these things very clear for you to be able to catch all the movement. Yes, they require focus. You need to really focus for you to be able to do all those things. So without focusing, you won't get these things properly. And as you can check the way I was doing them, and if you see again here, you see manipulate this eye, market return. Let me just mark for you guys. It's always not about the block, it's about the manipulation that was happening. We manipulate this eye like a QML. We have the eye, low, higher eye, lower low, market return there just to react to the zone. And here we have a continuation. Why this continuation? I explained to you guys what is happening with wave number 4. And here, if we check, we complete our cycle going to the upside. Then market create this reversal pattern. Then we drop with a correction, the one we call ABC pattern. Then market push again back to the upside. Check what happened here. We break again the low. This is the low we break. Then there was this liquidity, the one that was resting here. Again, we are the fake out zone somewhere here. This is the fake out zone, but let's see what was happening here. Try to find where there was a manipulation, why market get there, you see. So I'm gonna see, I'll look at this zone. This is where I found my manipulation, that I look inside the decision point. Again, this is a sort of QML, high, low, higher high, lower low. Then this is manipulation that's happening. Market come back, react to hits. We break this structure from the top. Let me show you. We break this structure here. After this shift in the market structure, this one, we call it a shift in the market structure. Market create liquidity. We run that liquidity. Then we are going. If you want to take another entry, count your level. You have 1, 2, 3. Then you take your entry after we run this one from M formation. What is the level? Check this level here. Let me zoom again back. So guys, if you watch this video and you go back test this thing, you're gonna see how they're gonna pay a lot for you. So let's see, if you have this zone here, what you see, we have a demand, rally, bears, rally, market manipulate that level, then market come back. We can say from our demand level is this one. You can start from here until the zone. This is our demand level, but I select the zone on top because of I see the hidden base. So if you can check inside that zone, all this zone is our zone. And if you go like this, you're gonna see there is a demand, and this is why market create this hidden base. They return back, trade inside it. Again, we have another hidden base. You could trade from here just to catch the movement before even the real movement happen. You could catch all this trade. This is just M1. And if you go, let's say you go to try and catch all the pips that you have been taking, you could say this one you catch almost 350 pips. Then if you are being able to buy, let's say you buy from here going to the upside, this is another 250. Already you are sitting on 500 pips. Again, if you know how to take the entry, this one also is 150, 70. And this you could even done before even you get the real movement, but you just need to know the direction of the market, where market is going for you to take the entry. But you see how you could play with all this movement and catch so many pips as you want. But as long as you know when to exit, you don't have to catch this trade and say, okay, I'm holding it because it's gonna drop. But the aim for here is for you to catch the continuation when you have your H1 direction. When you have your H1 direction, you know already I'm buying here, but on this zone I'm just scalping for me, maybe to compound your account. This is why you need almost 2 accounts. One account is for you to do hold these stories, scalping, and one account is for you to hold your trade for so long. When let's say you have your buy here, you are just holding it. Then the other account you are just scalping for you to be able to catch all the movement and go to the upside. So I think on my next video I'm just gonna talk about nice deck. I hope this price cycle is going to help you guys, so please watch the video, back test, and try to understand it. Sharp guys.